Okay, so I'm going to address two important things in this video. The first one relates to this comment that you can see here. It's a comment I've been receiving quite recently. For some reason, people think that I'm running away because it's a bear market and I'm being scared and I'm not doing any more videos. People are not hearing from me anymore. And that could not be any further away from the truth. So I want to address that. And also the second thing that I want to address is just me being completely real with you guys, okay? So I've seen a lot of people say online that they believe they're holding the next Amazon. And when they say that, they're referring to when Amazon dropped from 113 down to 6 and snapped back. They believe that's what's going to happen to their stock, when in reality, it's just not the case. Okay, so we're going to go into a lot more detail just to set your expectations straight for some of the stocks that you may hold, because believe you me, some of the stocks that we've invested in over the past year or so, they're not going to see their highs in a very, very long time. And I'll prove that to you right now. With that said, before we dive into it, I need to share with you guys what I'm currently reading at the moment. I'm currently reading The Big Money by Frederick Kobrick. Insane. This book is insane. So far, I'm a couple of chapters in, and I love this book. It's very hard to put down. So I'll be sharing some nuggets that I get from the book with you going forward. But let's address it, okay? Am I running scared? So this person commented recently saying it's disappointing that we don't hear much from you these days. Now we are in a bear market. Where do I even start with this point? So small and mid caps have been in a bear market for over a year now, okay? If you don't believe it, just check the charts, okay? Check the stock price action for a lot of companies that have been performing well, but the stock has been absolutely decimated, okay? It's been going on for over a year. And I would say around September, October, large caps joined the party. And only recently are we now seeing mega caps starting to correct, okay? I wouldn't say mega caps are in a bear market, even though I think there are great deals in mega caps right now. But essentially, I've been there all the way through and I'm still here, okay? But to answer your question directly and why I've not been making as many videos recently, if you go back to my video on December 5th, okay, I said I was going all in and I laid out my plan for what I would do when I go all in, and I'll share it with you now. This is how it plays out in my head. Worst case scenario, I go all in, I invest my cash pile into the markets and the market goes lower. Then that's not a problem, because over the next couple of months, over January, February, I'm going to be picking up additional shifts in the MRI clinics and, earning a lot more from my career. And also my businesses are picking up. It's over the Christmas period. We're going to make a lot of money from my Airbnb business. And also my other business ventures are bringing money in. So I'm going to put myself in a position where I'm going to deplete my entire cash pile. And if the market goes lower, I can then spend next month, so January, February, building up my cash pile once again to take advantage of even further discounted prices. So that's exactly what I've been doing. So in December, I depleted my entire cash pile, pretty much went all in on the markets. And I said, if the market continues lower in January and February, I'm going to spend all of my time picking up additional contracts at the clinics, building up my cash pile once again, and taking advantage of discounted prices. And that's exactly what I've been doing. I've been working 60, sometimes 72 hours a week, because I realized that this is one of the most important moments of our life. Like, JP Morgan says in bear markets, that's where stocks return to their rightful owners. And I really believe that, because I know that essentially I'm building my wealth on the way down. And once that's established, on the way up, that's where my wealth grows, okay? So this is our building phase right now. This is our accumulation phase, and that's exactly what I've been doing. You can't accumulate if you don't have money, right? And unfortunately, as much as I really enjoy making YouTube, I'm not in a position like Jeremy or Meet Kevin where, YouTube is paying them thousands a month. Like, YouTube isn't at that point for me right now. So for me, it's more beneficial, or it's more worth my time to spend more time at the clinics, build up my cash pile, and to buy more companies. And that's exactly what I've been doing. If you're on my Discord, you would know that I've started buying mega caps, because throughout last year, I saw a lot of value in small and mid caps. But now even mega caps are starting to get interesting, and I've been buying more mega caps than I've been buying small caps recently. And if you're in my Discord, you would know exactly what they are, okay? So that's why you haven't really been seeing many videos from me recently. I'll try to do better. Next week, I'm off for the entire week because it's earnings, all right? So we've got HIMS, we've got OPAD, we've got OPENDOOR. I think we've got another, I think it's Celsius. We have a number of my core holdings reporting next week, and I know I speak about these companies on my channel quite often. So I plan to live stream, all right? And I plan to continue to buy even more of these companies as we go along. So that answers that, okay? So this person reached a conclusion that he's guessing that I've sold out and I'm done. That's exactly, that is further from the truth. It's stupid. It's stupid in my opinion to sell out now. Yeah, but that's not been the case. And he concluded to say that that's what you get for investing in highly speculative, non-profitable growth companies. I mean, this has to be one of the most dumbest statements or the most ignorant statements, I've heard. But unfortunately, it seems to be a common theme right now. Retail investors, for some reason, have this delusion that it's just non-profitable growth companies that are getting destroyed right now. Okay, it's not the case. Look at Netflix, for crying out loud. Okay, Netflix is down 24% over the past 6 months, but from its peak, you can see Netflix is down 42%. Okay, this is a company with a PE ratio. Okay, Netflix are profitable. If you look at Netflix year to date, it's down 34%. So what? You're going to say Netflix is not profitable? That argument is really, really silly and it makes no sense. If you look at PayPal, okay, let's talk about PayPal. PayPal profitable. PayPal is down 43% year to date, okay? And if you want to look at its peak, and since its peak, PayPal is down 65%. So this is a high growth, large/mega cap company that is profitable and is down 60% plus. Okay, let's go for another one that's profitable. Square. Okay, Square is down 33% year to date. If you look at its peak was, we'll call it about here. Look at what it's done ever since then. It's down 60+% also. Okay, Square, profitable company. Okay, Shopify is getting absolutely destroyed. Okay, that's another thing. But that whole argument that it's only non-profitable growth companies, it comes from a place of ignorance, probably delusion, and it's just wrong. All right, so now let's get on to the next part. Okay, so we all believe, or the saying is, that we're holding the next Amazon. Okay, so of course, if you don't know, Amazon dropped from $113 all the way down to $6. Okay, so it was at $113 back in 1999. Okay, so the assumption is you bought at the top, and of course, if you look at Amazon right now, the share price for Amazon is 3,000. The share price for Amazon right now is $3,125. So you've done very, very well. That's the assumption. However, people always forget this, okay? And people always forget this and underestimate how long it took Amazon before it ever saw $113 again. Now, let me walk you through it, okay? So December 1999, let's say that's where you purchased Amazon. So December 1999, you bought Amazon for $113, okay? And for the next 2 years, it bottomed out in 2001, okay? It lost 90% of its value, and that's where it bottomed out at $6, okay? So now, assuming you decided not to dollar cost average, okay, let's see how long it would have taken you before you actually recovered, okay? So from 2001, where it bottomed out, 2002, I mean, the peak in 2002, you can see was about $24. So again, nowhere near your $113 purchase price. And we're now, 3-4 years into this investment? You're way off 113, okay? Bear in mind, Amazon continue to execute quarter after quarter. They're growing their top line. They're growing their inventories. There are many interviews of Jeff Bezos on YouTube where he was talking about all of the business metrics were improving, but the stock price was tanking.
At the peak of the internet bubble, our stock peaked somewhere around $113. Okay. And then after the internet bubble busted open, our stock went down to $6. It went from 113 to 6 in less than a year.
You survived. What was it that made you to survive, and virtually the rest of them are gone?
That whole period is very interesting because the stock is not the company, and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way.
Okay, so you're now in 2002, 2003. We're starting to see a nice rise. So in 2003, October, it goes to about $60. But remember, you're still way off 113, right? Then it has another drop, okay? And then we're now in 2004. All right, so we keep on moving. We're now in 2006. All right. So pretty much 6/7 years, you're still underwater with this investment. And then all of a sudden in 2007, right? So 7, 8+ years, you finally reach $100. Okay, Amazon touches $100 in 2007, but still you purchase at 113. Okay, so you've been underwater for 8+ years with this investment, and you still haven't even broken even. Okay, and then what happens? Obviously, the share price tanks again in 2008, and it goes even lower. It drops again in 2008 due to the financial crisis to $35. Okay, so remember, you're 9+ years in. All right, 2009 is really where we see Amazon recover from that dip from the financial crisis and continue higher, and eventually, okay, in 2009, so literally a decade later. That is absolutely insane. It took 10 years before Amazon ever saw $113 again. Okay, so if you didn't dollar cost average, if you didn't believe in the company, if you stopped following the company, it would have taken you 10 years to break even. However, if you dollar cost average on the way down, accumulating more and more ownership of the company on the way down, you would have broken even much quicker. And by the time it even reaches $113, it probably would have been a double up or a triple up, depending on how aggressive you were on averaging down. Now, I say that to say this. Okay, we're looking at a company like PLTR. All right, Palantir has had a nightmare. Okay, we reported earnings today. They missed by 2 cents, right? 2 cents, and the stock tanks. Okay, so it's down 12.71% today. Palantir peaked at $44. Was it $44? Yeah, peaked at about $44, right? And it's now down at 12. It's down over 73%. Now, retail investors seem to have the impression that we're going to snap back to $44 very quickly. And I beg to differ. All right. You saw with Amazon, even though they continue to execute, it still took them 10 years to reach that peak. So if you picked up Palantir towards its peak, you could potentially be waiting 10 years before Palantir ever sees $45 again. Look, I hope it doesn't. I'm a shareholder of Palantir, but I'm also a realist. Okay, I'm just being real with you guys. It's happened in the past. It can also happen again. Okay, because we know this rally here was built off euphoria. Okay, so if you're not accumulating more shares on good performances of the businesses and bringing your average down, you're probably going to wait a very long time. Okay, and we're seeing a lot of the macroeconomics affect the stock, affect the market, pretty much just affect the entire mood and the entire morale of the markets. Not, an attack is imminent and then it's not imminent. Interest rates, hikes, all of the macroeconomic conditions right now is destroying investor confidence, and it can remain like this for many years. All right, so that's just me being completely real with you guys. If you think we're going to snap back and hit all-time highs again, it could take a very long time, and that's just me being completely honest and being realistic with you guys. So next week, you guys are going to see a lot more from me. Like I said, I'm off for the large majority of the week, so I'll be able to do a lot more live streams and a lot more videos. I've not been running. I've been buying heavy, and I'll be sharing with you all of my purchases next week. But if you do want to know what I'm buying and selling in real time and access to my research and all of that good stuff, you can join my Discord group, and you can do so by clicking the Patreon link in the description below. But with that said, thanks so much for watching. I hope you gained a lot of value from this video. If you did, please make sure you smash that like button, and I'll catch you in the next one. Peace.